Trusts come in wide variety of forms, and not only those used for cash management purposes, such as investment trusts. One such trust is a land trust, which engages in real estate leasing. Today, I would like to explain land trusts using the example of Ichiro Tanaka, an elderly man who recently inherited a plot of land. Ichiro Tanaka, 90 years old, lives in Saitama City, Saitama Prefecture. His estranged father passed away at the age of 115 and left Ichiro a section of prime land, empty lot, in Minato Ward in Tokyo. In today's case, Ichiro is a 90-year-old elderly man, but it is entirely possible that young people such as yourself may suddenly someday find yourself in the same position as Ichiro, so try to imagine yourself in his position as we discuss this situation today. At first, Ichiro thought about selling his inherited land, but owing to the future Tokyo Olympics and other factors, there is a chance of land prices skyrocketing in the future. Therefore, Ichiro decided to forego selling the inherited land and to instead build a commercial building or rental property on it and use the rental income to enjoy his retirement years in wealth. Ichiro set out his plan by first asking a nearby bank to borrow funds for building construction, but he was immediately turned down. The bank probably thought that it would be difficult for a 90-year-old man with no real estate business experience to manage commercial buildings and rental property. Ichiro, in his travels, went to the head office of Trust Bank A and asked if he would be able to borrow the money necessary to make use of his land and lead a more affluent life. Based on Ichiro's age, financial status, and needs, the person in charge at Trust Bank A suggested that Ichiro build a commercial building on the property and establish a land trust for the purpose of real estate leasing. A land trust is a trust in which the landowner, trustor, entrusts the land to a trust bank or other entity, trustee. The trustee constructs a building on the land, makes effective use of the building through leasing or other means, and passes on the results to the landowner, beneficiary, as a dividend from the trust. The structure of the land trust proposal for Ichiro is as follows. First, Ichiro, at 90 years of age, concludes a trust contract with Trust Bank A, transfers ownership of the land in Minato Ward to Trust Bank A, and in exchange receives beneficiary rights of the trust. Number 1. Trust Bank A borrows funding for construction from Bank C. In practice, Trust Bank A is also engaged in banking business, so this funding is often borrowed against other trust accounts at Trust Bank A. Number 2. Trust Bank A concludes a contract with construction company B for construction work and has them construct the building using the money borrowed from Bank C. Number 1. Trust Bank A concludes a contract for building management with real estate property management company D when the building is completed. Real estate property management company D manages the building. Number 2. Trust Bank A finds tenants, concludes lease agreements, and leases the rooms to tenants. Trust Bank A collects rent from tenants. Payment is then made to Real Estate Property Management Company D for its services. Debts along with interest owed to Bank C or another trust account at Trust Bank A are repaid, and then the remaining amount is passed on to Ichiro as a dividend, minus fees for trust services rendered by Trust Bank A. For tax purposes, in this case the dividends received by Ichiro are treated in the same manner as if they were received as direct result of ownership of the building. Trusts have the function in which ownership of the property is transferred from the trustor to the trustee. In this case, the function is to transfer ownership of the land from 90-year-old Ichiro to the trust bank. In this case, number 1, ownership is transferred from a senior citizen with no experience in real estate management or operation to a trust bank which is made up of real estate specialists. As a result of this conversion, even landowners without specialized knowledge can entrust the placement of construction orders, financing, tenant recruitment, management, and more to a trust bank or other entity, the trustee, made up of specialists. No need for any hassle or special know-how. Next, number 2, the task of locating funding is transferred from an elderly man with limited financial resources to a trust bank with ample funds. As a result of this conversion, when borrowing funds for building construction, the trustee, trust bank or other entity, serves as a borrower and thus can borrow funds at favorable terms, low interest rates. Third, responsibility of the real estate rental business is transferred from Ichiro, a human who could develop dementia or will someday pass away, to a trust banking corporation. As a result of this conversion, should the landowner, trustor develop dementia or pass away after establishment of the trust, the real estate rental business can continue to be carried out effectively. In other words, by converting the owner of the trust assets, it is possible to make effective use of the land without selling or leasing it. Trusts also possess the function of converting assets. In Ichiro's case, the land and the building are converted into trust beneficiary rights. First, land and buildings, real estate, become trust beneficiary rights, a financial instrument. This conversion makes it easier to buy and sell trust beneficiary rights than real estate. Next, by entrusting, say, 1 billion yen of real estate and dividing the trust beneficiary rights into 10 units, it becomes 10 financial instruments in the amount of 100 million yen each. This conversion increases the likelihood of finding investors who would prefer to purchase a 100 million yen trust beneficiary interest over an expensive 1 billion yen piece of real estate. Additionally, in the event of Ichiro's death, the trust beneficiary rights may be divided among heirs according to the ratio of inheritance without having to sell the real estate. Third, it is also possible to borrow from financial institutions in trusts. In the event that Ichiro needs urgent funding due to surgery, hospitalization, or other unforeseen event, he can borrow money from financial institutions using the trust. By implementing this land trust, Ichiro is able to receive dividends on a regular basis, enabling him to live out his remaining years in wealth.